morning, gold prices make new record highs. But the question is, how did they reach such high prices? How did they reach the $3,500 per ounce of gold today? And the biggest question will be like, why are we even here in the first place? Is this even good for the economy in the first place? Should we be like celebrating that new record highs, or should we be really be that scared about the new record highs of the gold that's setting? In simple terms, I would be saying you should be getting worried actually. Especially if you're into investing, yeah, you should be probably be getting worried about the new gold prices and where they're heading to and where they're likely to be heading to the first place. Probably actually. Like seriously, you should be really scared about the new gold prices because it's not fun the way like I'm having a smiley face. Because we should try to understand why gold prices are getting high and why are they looking high as of today in the first place. Has to understand that let's go have to went back to the 2019 to see where gold prices started hiking and why they started hiking. Just for the record, I need you just to look at this, okay? In 2019, gold clocked 1,500, 10% than the previous year, and that was 2018. 2020, gold closed at 1,770, 27% than the previous year. Okay, 2021 gold closed at 1799, 1.6%. That wasn't bad. 2022 1,800, almost no change. It never made any kind of changes then. 2023 gold closed at 1,943, 7.9%. As of 2024, the previous year, gold closed at 38.2% than the previous year. 2025 gold closed at around, as of 2025, expected to be closing around 35% as of 2025. But the question is, what has caused the gold to be raising this high in the first place? What has caused gold to be running this high in the first place, or in the, how did we reach at this extent? In simple terms, most people will be like, why are we here? But well, to understand this, we should look at the factor that caused gold prices to rise from 2019 to 2025. Because I'm not gonna give it a ballpark figure just out of the blue. Hey, the first factor, we should look at the trade wars between the 2019 and the 2020. The pre-COVID conflict between the US and China. The Trump administration had a war conflict between China and the US, and that trade war almost caused investors to be running for factors like gold. Shortly, not for long, as Trump was running out of power, pandemic is off. When the pandemic is off, came into existence, well, gold prices got high. Reason number one, we should look at central banks. 2019, in 2019, around December, liquidity was low, meaning there was a panic for withdrawals. Like people were running out of money. Well, they were like fighting for their level best to see that they can get their money out, so that they could safeguard themselves into other assets like gold. In simple terms, that means there was liquidity of money running for gold. In simple terms, many investors were running to get onto things like gold, to say like they should at least to see themselves getting somewhere. 2020, 2021, we saw that QE, the quantitative easing, where the Federal Reserve kept interest rates low because it was trying to back up the slowing economy, or the slow down the economy, so that to create a boost, hence inflating the economy actually. Because when the Fed created quantitative easing, there was a lot of printing of money actually. Almost 300 billions just in the US were just directed to individuals. Besides that, there was a lot of money also getting funded everywhere. We saw the inflation rising from the 2021 2025. Inflation has been rising over and over, going up and up and up. In simple terms, we should also look at the geopolitical tensions of 2022. The Russia invasion of Ukraine. Well, that was supposed prices to go high. Almost in 2022, gold closed to around $2,000 per ounce in simple terms. But should also try to understand that these conflicts these were not the only conflicts that we have. Also had an invasion in 2023 of the Israel-Palestine war. We also had the Israel-Iranian war in 2024. And such kind of invasions have caused the gold prices to hype up and go higher, because whenever there's a war, whenever there's any conflict, you always be seeing gold prices going high. But there's a bigger picture behind this. We should also look at the presence of the BRICS. Especially when I say the BRICS, many may say like, yeah, and you're trying to talk about de-dollarization, but we are looking at central banks in simple terms. Look at the central banks, how they have been performing in simple terms. If you look at the central banks and how they have been implementing things, or have been carrying out a lot of number of things, we should look at central banks like we should look at the something that we call like countries like China, India, Russia, South Africa. Only these countries just of 2025 have just added 9% of the performance of gold just of 2025. Just 9%. Meaning central banks are buying more gold than more than fellow individuals or investors or institutes. Just central banks. Imagine the moment you see central banks carrying more gold than fiat currencies, just know the economy isn't really doing good in the first place. It's not really good. It's not doing good. Then these are actual factors that we should be breaking down in simple terms. We should also be looking at the potential growth of our countries global. Well, in simple terms, I'm gonna look at the countries like in simple terms. Let's look at the countries like the UK. The UK is expected to grow by almost 1.1 or 1.3% just over 2025. EU is expected to grow by 1.1%, and that's really slow growth in simple terms. Like seriously slow growth. If you look at the US itself, the US itself is gonna be growing by almost 2% expectations. If you think that's growth, we are speaking of a country with a global currency reserve currency. We are speaking of a country that's known to be having the greatest economy of all times. We are speaking of a country slow growth economic indicators that are showing sickness in the economy or slowdowns in the economy cannot make investors feel like they're safe investing into today's economy. Global. I'm not speaking of the US. I'm not speaking of anywhere, but global. The way how the economy is doing, it's kind of a slow back. It's kind of not really the best how one could do, like try to implement it or to say out like, it's not just the best the way you would try to analyze it and say, hey, this is how God doing, this is how everything is just turning up or running up in simple terms. But we should also look at the dollar. So the dollar for the last past month has been slowed down for the last past month since April until September. Gold has been bouncing up and down, try to break above 3,500. Well, gold has been the DXY has been doing the opposite. When I speak of the DXY, I mean the dollar index. The dollar index indicates the strength of the dollar or the weakening of the dollar. In simple terms, the dollar has been, since April, the dollar has been lower than 100 US dollars. As of today, it's trading around $97. Such factors could not leave you into things that may think that you like, why is gold getting high? Whenever you see gold prices going high, just understand two or three things. Inflation is going high. As of today, the Federal Reserve hasn't yet got its goal of the 2% inflation. However, here's the funny part. We expect the Federal Reserve to be getting the goal of 2%. However, the core inflation is running for almost around 2.8%. And as of today, the Federal Reserve is thinking of changing that goal to be, they don't think that they really need that 2%, or have they failed to get that 2% goal recognition in simple terms. Many of us will be expecting, because as of history has been saying it, the Federal Reserve has been having a goal of 2% inflation. That's what they say. That's the best inflation they need for the economy. But when they start saying it's not necessarily needed, well, has not only Americans but anyone, because the US mostly exports dollars to the rest of the world, mostly expect more exportation of inflation to the rest of the world, expect higher prices, expect more QE that's going to be taking place in the next few months, because the moment we see the Federal Reserve easing interest rates and the monetary expectations, expect gold prices to be going higher and high. And just for 2025, as I said, we are expecting gold to be just adding almost 35% than the previous year of 2024. Well, thanks for watching. See you in the next one.